Hey, it's Mike Cambright with FlipNerd.com, and welcome back for another exciting VIP interview where I interview some of the most successful real estate investing experts and entrepreneurs in the industry to help you learn and grow. Today, I'm joined by Dawn Rickabaugh, the Note Queen, who's a high-volume note buyer and sought-after trainer of teaching people how to buy and sell notes and a seller finance specialist. So it's a great show. We haven't talked a whole lot about notes on the show before. Before we get started, though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Dawn, welcome to the show.
Hi, Mike. Thanks for having me. It's a pleasure.
Yeah. Glad you're on. As I just said, we really haven't had a lot of note experts on before, so it's going to be great to talk about this. And for a lot of folks, most people would consider me a veteran real estate investor. I bought hundreds of houses, and I know, I have a financial background, so I understand conceptually notes, but know nothing about how to transact in notes. And I know there's a whole other world out there that I'm just not part of. So it'll be great to kind of share some of your insights.
Yeah. The thing that I think is interesting is that most people who are into real estate don't realize that they know more than they think they do about notes, because it's in some ways it's been set up to be a really sort of arcane or late night infomercial. It's a really it's been shrouded in mystery, and partly because maybe people make a lot of money coaching you if it's super, super hard to understand. So to me, every investor, it's just, the dance between property and paper. They're two sides of the same coin. Property turns into paper, and paper turns into property, and so
they go hand in hand.
It's so important. Just a few concepts really can open up the path for what you can do.
That's great. Well, Don, hey, before we get started, talk a little bit about your background. I know you did not start as a note buyer or a real estate investor at all, like many of us, and you have a very interesting story. Why don't you tell us a little bit about your background and kind of how you got started?
Yeah, well, I graduated with my RN, my bachelor's degree in nursing, and I went to work in the ER and the ICU, and I loved that. And then I popped out lots of babies. Right. And then, as time progressed, mainly my life revolved around my family, and I had switched to a type of nursing where it was more like a paperwork job, where I could work 3 days a week and I had autonomy, because for me, if I was going to have all these babies, I didn't want anyone else to raise them. So anything that would give me more time and it wasn't up to daycare was important to me. But anyway, after a few years even though it gave me a six-figure income working 3 days a week, which was phenomenal, I never expected it to do that. It's just that I was getting brain dead. I felt trapped. Because I had ceased to grow. They sold the company, and then thankfully they started taking away some of the seducing qualities, like how much money we can make and how free we could be with our time. So then that gave me the liberty to say, I'm 3 years late, but it's time for me to just make the jump. And in the meantime, I'd taken all these courses. I'd taken every course you can think of, like the Robert Allen stuff and tax liens and trading on options. I mean, I always thought, even though I was doing my W-2 and raising my family, someday I think I have the ability to make money in real estate, notes, stock market kind of stuff. And the notes is what I fell in love with. I just kept coming back to that. Yeah. So
why is that? What interested you? Like most folks love the fact that they can touch and feel and see a house. And obviously there's an underlying asset behind it, really is the note.
Right.
But just talk about how you gravitated towards that versus what most people do is the physical asset of the house.
maybe I'm lazier than you guys or something. Because I actually, well, and this thing, financial calculator. When I learned how to use this, I don't know what happened, but like all of a sudden I just felt like, like it just opened the world to me, and I felt so smart, and I felt empowered, and I just loved. There's just so many ways that you can break it up, and I mean, I can tell you a quick story about how I had picked up a nice property with owner financing. I should have kept it as a rental, but guess what? I was too lazy. I didn't want to manage a property, and so I turned it around with owner financing and wrapped it. I mean, the owner financing and notes. But I might get that property back someday, right? They might not make their balloon payment 4 years from now. So I don't know. I just love the fluidity and the ease of it. Yeah, I really do.
Yeah. Well, so talk a little bit about, just to kind of get real fundamental here, since we haven't had a lot of people on the show before. Yeah. Just talk about really high level, like what is a note? I mean, it seems so obvious, but just kind of let's go through 101 here. That's
a good place to start, Mike. So, a note is a promise. A promise. I owe you. It's an IOU. I promise to pay you $100 a month for the next 10 years for whatever reason. So if it's secured, like a real estate note or a car note or a boat note, if it's secured with something, that's one thing. But we could have an unsecured note too, right? I could have a promise, an unsecured debt. That would make you like a credit card.
Right.
Or it was a personal loan to your cousin that you should have never done, that you'll never see the whole amount of it. So it's just a promise. So notes are, I need money, and when in real estate notes, to buy this property. So either you go to a bank, you borrow the money, you sign a note and deed a trust or mortgage. Or you go, if you're a flipper and you're using hard money, you go to the private lender. Yeah. What do they ask? A note and deed a trust. Right? So if you don't keep your promise to pay, that the lender can take the asset back to satisfy the debt, right? Yeah. So note is the promise, security instrument is the beef behind it. Right. So if someone owner carries a property, they get the same thing. They're not lending money, but they're lending their equity, which is like their money that's trapped inside the house.
Sure.
So then the buyer brings a down payment, the seller becomes the bank, and they start receiving those monthly payments. And if they ever want to cash out of those monthly payments, they can get 50 cents on the dollar, 80 cents on the dollar, or zero, depending on how they've set up their owner finance transactions. So notes are created three ways that we mostly know: banks, private lenders, owner will carry property sellers, and a lot of people, I can do either. I do some private lending where I originate the note. And most of my business, the majority, is buying discounted paper of owners who have carried who now want out.
I see.
I don't know if I stayed top level.
Well, it's easy to get. It's easy to start to dive down. So, so before we talk about that, like actually buying, how you go about buying notes from owners who have carried the financing. Well, let's kind of still a little more stick with the fundamentals and just talk about how a transaction typically occurs, like how an investor finds opportunities, I guess, to either buy or sell notes.
Okay, so you have to realize, where are they created? A note is born out of a private loan. Those guys, when they're lending, they're usually staying at what, 60, 70% loan to value there.
Sure.
Those guys usually don't want to sell at a discount. Right. Their whole point was they knew what they were doing.
Right.
Owner financed deals, they often don't even know that they can sell the note. So what you got to look for if you're searching is people who have carried back paper. They've offered seller terms on the sale of their property. And chances are they don't even know they have something that they could sell. How about the real estate agents that help people close with owner financing? I had someone last week who's an agent says, I've used owner financing to help my clients sell their properties for years, and I never knew there was a secondary market for the paper.
Sure.
And now if I can learn that, then I can not only close more deals because owner financing will put more commissions in my pocket, but I can make a fee on learning how to sell the note.
Right.
Help my clients liquidate if they need to. So you've got real estate agents theoretically are a really good source. Investors. There's a lot of mom and pop investors who at some point in their life, they get tired. So, I mean, if you want to do title searches, you can, like who carried paper, who's the owner funding, who was a private beneficiary, in that slot.
Yeah.
And people who own their properties free and clear is another great one. But you can pull those lists if you want. But increasingly, investors like yourself are saying, gosh, I'm going to buy, like in my market, I can buy properties in the $20,000, $30,000 range, and I can sell them on owner carry for $60,000 or $70,000. But I need to figure out how can I liquidate and get at least my operating capital back,
right,
and things like that. So it's got to hang out. You got to hang out and start talking to anyone, attorneys, financial planners. Jeff Armstrong has a book called, I think, Every Good Idea That There Ever Was to Buy a Note, something like that. So I would suggest people go over there and buy that if they really want to know all the ideas there are. I think it's armstrongcapital.com, Jeff Armstrong.
Okay.
He's written a great book about that.
So Don, talk about why somebody that has owner financed their own house maybe and sell it on to someone else. Why would they sell the note? If they're willing to sell the note at a discount, why wouldn't they have just sold the property at a discount? Talk about kind of how that makes sense. That's
a great question. A lot of times, just to sell the property, they need to carry the financing, and they may in the beginning, not intend to sell the note.
Yeah.
So let's say, hey, I want $100,000 for my property. No one can get a loan, so I'm going to have to carry just to get my price. Or maybe if I'm offering terms, I'll bump it up 10%. Okay, now my property, I'm going to be able to sell it for $110,000 with 10% down and create a note and get the rest over time. Or I could sell to the cash buyers for $65,000, and they go, I think I'll take the 110, because a lot of, sellers get stuck on price, right?
Right.
And it's not a bad thing. So if they end up keeping the note, then they usually do well, and they defer capital gains and all those things too. Keep their money working for them. But then life happens, right? You know that as a house buyer.
Yep,
Why
absolutely.
would someone sell to you at a discount?
Right.
They need money, something happened, or they're moving out of the area and they just want to liquidate all their ties. I just got one under contract that it was awkward between family members, and that one didn't want to be on the hook for having to foreclose if the other family member didn't pay. So sometimes there's awkward situations, divorce scenarios, things like that.
Yeah.
And then with notes, you don't have to just say all or nothing. Like with a house, you can't just sell one bedroom, right?
Right.
Of a 4-bedroom house. But if you have a note, they can sell 3 years of the next 10 years payments just to get the money they need now without taking a massive discount and walking away from the asset completely. Sure. So basically someone needs money, or there's some hassle factor, or they have another investment. Let's say if I can take a discount here to get out of this and get some cash, I can double my money in the next 6 months with this great opportunity that just came up, or a business I want to start, or, grandma went in the hospital. I don't know, stuff.
Yeah.
So,
and typically in your business and kind of what you advise, I mean, I assume you want collateral on the house, and you obviously prefer to have first lien deed of trust. Is that the only way you invest, or do you do some creative things there?
Well, I do a variety of things, but yeah, first position, like I have to look at everything like I'm going to end up with that property, and what am I going to do with it if I get it?
Right.
There's sometimes where I go, this is a gamble, and I'm buying it like it's a discount, like it's a non-performing note, and it's going to default. But it's like some little mobile home thing. For some reason, I just liked it, but I would have never wanted the collateral. But that thing performed like a dream. But I calculated in my risk and how much I paid for that note, probably 50 cents on the dollar. And they paid off early, and I probably got over 100% return on that one little investment. But still, most of the time, I like to be in first position. My loan to values when I'm making a loan, originating a loan, are 60% usually or less.
Okay.
If I'm buying discounted paper, I'm usually even less than that. I would say most of the time I'm under 50% of the value of the collateral, so that I've got a lot of protective equity on top of me if anything goes wrong. Because, right, it's going to take me a while to, if I'm the bank, then I'm the one that has to foreclose, or deed in lieu, cash for keys, go hope to take possession of it before all the copper gets stripped out of it, right, stuff like that. So, what was the question again?
I don't remember, but let's ask another one. So, so as a real estate as a note investor, talk a little bit about the importance of where the properties are geographically relative to you. And I know that even for actual real estate investors, I know I've always felt comfortable doing it in my market, but I know a lot of people now that just buy all over the country. They're comfortable in lots of different markets. But talk about how that comes into play in your world.
I mostly, well, when I lived in Southern California, which was most of my 50 years of living, I just barely moved to Carson City, Nevada. So I haven't really gotten a chance to explore the local market here. Like, I've been here a month so far. But in California, I couldn't do this owner financing and note gig if I just only wanted to stay in my market. So the note market, unless you're just doing private loans, I always stayed within an hour, 2 hours of my office there. But buying discounted paper, it's advisable. I mean, there's a lot of, Texas, for instance, you guys do a heck of a lot more owner financing than California does, for sure. I mean, there's some areas of the country where there's a lot of paper being created. So you kind of got to go where the product is. Also, I would rather, I think about, okay, if I had to foreclose, I would rather do deed of trust states than mortgage states, because to foreclose, it's usually quicker and cheaper to get the asset back.
Yeah.
Like, what does it take? 45 days to foreclose in Texas?
21.
Yeah, so you could have the if someone doesn't pay you, you've got your asset back. If you do something in New York or New Jersey or even South Carolina, it might take you 3 years to get your property.
Yeah, that's crazy.
So you have to think about that, not just where, just let's say what was the right word? The regulation or the legal process in that state.
Yeah.
Right. But I have notes all over the place. Yeah,
yeah, and for the most part, you don't care where they are unless something goes south, right?
Right. So, but you handle that conversation in your head before you pull the trigger and buy it.
Yeah.
So that's why if I want to limit my exposure, and I think there's some upside, but let's say it's a pretty new note, there's only 6 payments made so far. That's not a long seasoning.
Right.
I might say, well, I'll buy a partial. I'll buy the next 2 or 3 or 5 years, and I keep my overall exposure in that one deal low until it's proven itself and has a better track record, and then maybe I'll buy the rest of it afterwards.
Okay.
Or or I just know that I want it, and I'll buy it at whatever 50 cents on the dollar, and maybe hope. I never really buy hoping that I get the property, but sometimes that happens anyway.
Yeah, yeah. So talk a little bit about how note buyers like yourself are funded, because effectively you're acting as the bank. So unless you're independently wealthy, where do people get their funding to effectively fund those deals and, I guess, effectively make a spread in the middle, right?
Right. So the people that are listening, or me personally?
You personally, or if you want to share what you do.
Oh, yeah. There's a lot of money fleeing out, and rightly so, fleeing out of the stock market and, Washington and Wall Street. And so there's just tons of money increasingly getting into self-directed IRAs. So those are qualified accounts, but people can invest in anything. in they could buy a house, they could buy a note, they could make loans. There's almost nothing that you can't do in a self-directed IRA. So that is a great source of money. So let's say someone had $300,000 in their some mutual fund thing, Schwab or one of those guys.
Sure.
And, maybe they've been making 0 to 1% for the last several years. Well, they're not going to be able to retire on that, right? So if they roll that money out, if it's a solo 401k, a Roth IRA, a traditional IRA, you just roll that into its equivalent. That is a lot of money sitting there that's just passive. It's in a tax-deferred or tax-free environment. Those people need the rainmakers like me, like you, to find deals, and they want to put in the money. So I guess when I first started out, I really thought the only way for me to make money was to get a note under contract, to sell it to one of the big 5 companies that was out doing at the time. Well, they got it just wasn't working, and I got so frustrated. And when my career really took off was when I just said, I'm ready to make the decisions, and I'm going to pull the trigger with, some of my money. I had, some close pocket investors that, believed in me and took the spin with me the first time. And then as that just started, sorry, my fax just went off. But then more and more people, like, I didn't even have to ask. And there's like, well, can I invest in your notes, because I'm getting 1 or 2% over here. I'm getting nervous of the stock market. I would rather be giving, because 7, 8, 9% is a very reasonable and attainable return that's, I think, fair to both sides. So there's a lot of money that just wants a piece of investing in real estate, investing in paper without the daily grind. Right. So money is just dropped in my lap. I actually have more capital than I can put to work.
Sure.
Because
it's a good problem to have, right?
Yeah, and you had introduced me as a really high volume player, but I'm not one of those really. You can see this is my home office. I'm a one-person show with a part-time assistant. I'm not like a big hedge funds that buys these big massive pools and stuff like this, but it's what I do. Like, I've got up on my board, I've got 6 notes that I'm in some process of buying right now, with 3 or 4 emails that I haven't got to from over the weekend. So I don't know if your listeners can just get the idea that if you learn just a little bit about owner financing and the discounted note business, you will find more ways to put properties together. If you want to buy property, buy with owner financing. Ask the seller to carry. Oh, they don't want a payment? Okay, let's reverse engineer it so I can buy the note, and they get what they want. So, there's just a bajillion ways it just expands exponentially. If you just understand a little bit about discounted notes. Do you just want the fundamentals of what makes a good note? What makes a note sell at 80 cents on the dollar instead of 40 cents on the dollar?
Sure, yeah.
I know?
Yeah, that'd be great.
Okay. One of the biggest mistakes I see people make, they carry paper, is usually they've been advised by their attorney, their CPA, and their real estate agent who don't know better, but they just copy the banks. Okay, the banks are lending at 4 or 5% for 30 years, so that's what I'm going to do. That's fine, because if you don't have a better way, if you don't have a way to make more than 4 or 5% returns on your money, that's a great way to leave your money. But if you need to sell that note, 2 years down the road, you got 28 years to go. Maybe the person dies. Now the heirs are going, we don't want $800 a month for the next 28 years. We want to liquidate and split the money up. Yeah. Well, that note's probably going to go for, even though it might be well secured, meaning it might be against a great property that's really desirable, but still the yield is so low that someone's going to come in and most likely offer in that 50 cents on the dollar range.
Right.
Why? Time value of money. Mm-hmm. Inflation. If I get $800 today, it buys groceries for a family of 4 for a month.
Right.
How much will it buy 28 years from now? That last payment, it's not hardly worth anything. So the biggest problem I see is long amortizations People don't understand that. They go, well, look how many payments that you're stacking up. This is $1 million note. By the end of it, they don't get that, no, if they paid off their note now, they're only going to pay me the balance of the note. I'm not guaranteed. It's not like an annuity that for sure I'm going to get for the next 28 years.
Right.
So the best thing people can do is, Mike, if you have a property that you pick up and you decide instead of to flip it to somebody for cash, you're going to own or carry. Let's say, what's a typical price point in your market?
Let's just say 150,000.
So you bought it for that.
Let's say we bought it for 100,000.
And it's worth 150.
Okay.
Okay. So someone comes to you and says, I really want to buy this, and but I can't pay you all cash. You're going to go retail instead of wholesale, right? Is that a retail price?
Sure. Yeah.
Yeah. Okay. So then, what can you do to minimize the discount you will take if you're going to sell your note? What's the first thing? You're going to want a $2,000 down payment or a $30,000 down payment?
As much as I can get.
As much as you can get, because that's the hard equity. That's the protective equity that makes you feel warm and cozy at night. So if the market goes up or down, you know that you are not going to have financial loss, statistically speaking.
Right.
You want the biggest down payment you can get. You want the biggest monthly payment that they can afford without putting themselves in jeopardy. So, because if they can afford $1,200 a month instead of $600 a month, see, the person who can only pay $600 a month needs a long amortization.
Right.
If they can afford $1,200, then you can maybe pull it down to a 12 or a 15. There's a lot of notes that are fully amortizing in 7 to 10 years. So the shorter the amortization, more money sooner better. Biggest down payment, shortest amortization, and the highest interest rate that you can get them to agree to, and it doesn't violate usury laws.
Right.
You know, so, and then get someone else to service it for you. Hire it for $15 a month. Have someone else service it, because then there's a verified payment history, so that when you go to sell the note to someone like me, we want to know if this is performing, and maybe you're not very good at keeping records.
Right. Or if you want that person to essentially refi,
right?
And cash you out.
Yeah. Exactly. Yeah. So those are some of the nuts and bolts of it.
That's great. That's great. We could talk about this all day long. It's such a huge kind of space. So, well, Dawn, we're kind of running out of time here, but talk a little bit about, if folks want to learn more about, talk a little bit about what you do. I know you help educate others, and then maybe how they would learn more to find out how to work with you, or how to kind of educate themselves.
Great. Thank you for asking. NoteQueen.com, that was a brand that I took on in 2007 when I went out on my own. Yeah. And it was sort of a joke in the beginning, but it turned into, well, what the heck? You remember that? You don't remember Don Rickabaugh, but you remember that. Right? Anyway, I wrote a book called Seller Financing on Steroids. There's a free download on my site, NoteQueen.com. That's a good place to start, because it's sort of an introduction. And then from there, I've put a lot of information on there that's for free. I have some YouTube channels that are actually showing people how to use the financial calculator. Okay. I have an online, like a paid content site that's very cheap, where a couple times a month we go through real live deals. And so people really see everything of what I'm doing, and just building a little community there. But anyway, NoteQueen.com is the place to just sort of get tapped in and start dipping your toe and see if it's something that, you resonate with.
That's great. That's great. We may have to have you back for Note Investing 201 or 102 or something, Don.
Yeah, I would love to.
Awesome. Well, hey, thanks so much for your time today. This has been great information. I know we just basically touched the tip of the iceberg of all you do in your business and all that you can do in note buying, but we definitely appreciate that kind of jump start, at least.
Well, thank you very much. It's a privilege to be here. So
yeah, thank you, and stay in touch, and we'll talk again soon, okay?
All right. Thanks a lot, Mike.
Have a great day.
Take care.
Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit flipnerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to flipnerd.com.